welcome to today's webinar. Today we'll be looking into November and to the end of the year. You might have seen that our research department has just published their November strategy report. A copy of that report is downloadable on the GoToWebinar control panel. You can also find copies of the slides that will be presented today in the control panel. And we're always interested in hearing from you. So if you have any questions during the presentation, please type them in the question box in the control panel. And at the end of the presentation, we'll allocate some time to answer them. And then finally, I'd like to just mention that we will have a recording of this presentation. And so to come back to the webinar later on. And I'll be sending out that link in the next few hours. And so now, without further ado, I'll leave it on to our research department to take over.
Yeah. Hi, it's November 6th, out of Ho Chi Minh City. Big week for global politics, as you know. Election in the United States, November 6th. We'll see if the Democrats can retake the House of Representatives. It does not affect just the United States, affect the whole world in terms of geopolitics. So I will be talking about this on Friday during my daily weekly vlog. So let's kick off with a few things. Our view is that we see a potential equity year-end rally. Not sure if it's going to start in November or December, but we think that markets are a bit oversold right now, so there could be a technical / sentimental rally, which would be coming from the fact there's balancing around the world between bonds, equities, and other asset classes. So watch for that. That's our bet for the short term. Our view in the 2019 year is a bit more negative. We think that generally economic growth will slow down globally, including in Vietnam, not in a significant manner in Vietnam, but still it will slow down. And that inflation due to wage pressure is going higher. So that is a conundrum for central banks. So potential year-end rally, we have put in our monthly strategy report for November a new trade, which is basically a relative trade, long Asia ex-Japan, short the S&P. And the reason, there are two main reasons for that. One, the S&P is outperformed in price term in US dollars the rest of the world this year due to obviously profit repatriation and due to lowering tax rates by Mr. Trump, and that has pushed US equities higher, but we don't think it's sustainable. If you look at the MSCI Asia Pacific, it's down as of the end of October 16%, while the S&P was barely down 1%. To me, that doesn't indicate that it can continue in 2019. So this is a relative trade, which something I recommend for the next couple of months. The larger issue is, as you can see on chart 7, is because Asian money will stay in Asia. It's something I've been talking about for 20 years, but finally it's happening. And it's because of reconnaissance that things are better in the region than elsewhere in relative terms. So recommend buying Asia ex-Japan and shorting the S&P. You can do it through either basket of stocks or you can do it through futures. Why do I say Asia ex-Japan? because in Japan there's an issue with the fact that the Bank of Japan has been buying all these ETF and all these JGBs, and it's very hard to see how that can continue. Now let's go back to Vietnam. Our economists expect a bit of a slowdown next year in GDP growth and a bit of a pickup in inflation due to higher commodity prices and some pressure on wages, but nothing dramatic. We still sustain probably a GDP growth of 6.6 to 6.8%, as shown in slide 8. And we still expect more divestment from the government. So that would be probably positive to the equity market, but it's hard to see equities going up back to the level they were in the beginning of the year. They probably will stabilize, not go much lower unless there's some external factors that come into play. So we still maintain our bullish view on the economy in Vietnam, and we still have some bullish calls on the Vietnam's equity market. Now, from a stock market perspective in Vietnam, October was terrible, obviously. Small cap did better than large cap, which is kind of rare in a market that's dropping. So November so far has been mixed. We expect December to do better. And one of the reasons why the market hasn't done well is liquidity has dropped quite a bit compared to September, as you see on chart 12. And there hasn't been that much buying from foreign institutions. It's been mostly domestic institutions. So the foreigners haven't been involved in the market so far in the last couple of months. So the question is why? And the answer is very nebulous. I mean, is it because they sold their stuff and then are keeping their dong into their custodian account, or do they have repatriated some money? We've seen a bit of involvement from the State Bank of Vietnam in buying dong to support it, which actually has stabilized in the last couple of weeks. But is that because foreigners have been selling their portfolio holdings and repatriating money, or is it because of speculation by funds around the world? I don't have the answer to that. Okay, so on terms of the Q3 earnings, chart 13, banks have grown at a bit of a slower rate than previous quarter, but they're still up 17% year over year. Real estate stocks surge as company recognized profit this quarter, and then steel company is still struggling due to higher import prices and rising competition. But we still like HPG, it's one of the exceptions. And if you see on chart 14, revenue and non-profit and profit after tax growth by sectors, oil and gas, financials have done very well. But if you exclude those sectors, the market revenues and profit was only up about 12% and 9% respectively in the third quarter. So there was an interesting chart produced by one of our colleagues, and he looked at the price to the PE, basically PE band of the VN index for the last 2 years, and came out with the fact that it's very rare that the PE in the last 2 years, of course, a very short history, has dropped below 15.6 times. So it's right there right now. So does that mean that we're at the bottom of the cycle? I have my doubt about that, but that's his analogy, because if you look at a 5 or 10 year horizon, it has done worse than that. I mean, the P didn't go below 15.6, but let's assume that earnings are stable next year, 2019, then we're probably at the bottom of the range in terms of PE. Okay, so a couple of ideas that we have in certain sectors. So our real estate analyst has become a bit more bullish on on his own sector in the last couple of weeks. He was very bearish a few months ago. So he likes company like HDG, which is Hado Construction, because they reported higher level of profit, and it's about higher than his forecast. And he thinks that some of these power projects can help the company generate stable cash flow in the next few years. And for VHM, which is VHM, whatever. Okay, anyway, VHM, he thinks that project from the Golden River, Central Park, and Harmony can bring a positive result. And the Vin City mega project will help VHM maintain its growth. And there's the last one that he likes is DIJ, which is DIC Corp, has a huge land bank and comes from profit will come from divestment. Our analyst here next to me follows that stock VJC, so I will let him talk about it. It's Vietjet Airlines, and tell you his opinion on it.
Okay, so basically, if you look at VJC, the stock dropped quite a lot for the next 2 weeks. A little bit because of the whole influence of the market, but then I also think because of the worry about the rising in oil price. But then 2 weeks after this, if you look back, you see that oil price already go back to where it is, around 60s, 70s. And I believe that for VJC, the 2018-2019 gonna be the time that the efficiency of their fleet gonna be reached the highest, and the efficiency can definitely cover most of the negative influence from the rising oil price. So if you look at the earnings for this year, we believe that the airline can still maintain a very high growth of around 39% only earnings in this year, and around 25 to 30% in 2019, which is really high, and it's really hard for you to find a good growth companies like this in the market right now. So since I cover pharmaceutical as well, I'm going to talk a bit about the pharmaceutical sector, which the earnings of IMAX Farm, PME, and DHG already released the Q3 earnings. So if you look at the earnings, DHG doesn't already just met the 62% of our analyst forecast, so a bit disappointed because we expect it low, but not that low. It just shows that the company is now really big. It is a top pharmaceutical companies in the country, so it's really hard for them to keep up with the high growth. But then for stocks for companies like IMAX Farm and PME Fargo, they done pretty well, which already complete around 70% of their target, of our target. And we prefer PME much better because the sale in ETC is better, the valuation is cheaper, and the company has a catalyst which can boost the stock price, which is its biggest shareholder Stardust is gonna have a plan to increase its ownership in PME from 49% to around 70%. So I think it's gonna be a good catalyst for the stock price.
Okay, thanks for that, man. So just to sum up, basically, if you look at table 5 on our strategy report, you will see our thematic portfolio for long-term absolute return investors. We haven't made any changes in October. There's 20% cash in that portfolio. We intend to develop to put that cash to work in November or early December. So we're looking at ideas. So far, You see the names of the stock. It's a very diversified portfolio, and we think it's the right strategy to have right now. And finally, we will publish our yearly strategy report towards the end of December. And this week on Friday, I will talk to you about the U.S. election results. Thank you. If you have any question, let us know.
Okay, so that's our presentation for this month's strategy report. So now if you have any question, please type in the box below, and Bernard, me, and our analysts gonna be here to answer your questions.
Thank you very much for joining. If you have any questions, please feel free to email them directly to our research department or to me. Goodbye.